Hey guys, hey Wyckoff Nation, welcome back. Let me know if you could see my screen. Hi Eric, hi Ellen. Okay, we're still waiting for William to log in. Iqbal, Mark. So good to see so many familiar names. I wanted to say faces just because of the best of Wyckoff, yeah. All right. Okay, we're still waiting on William, but let me just start with some announcements. Well, first of all, for those of you who are new to our community, new to the tape reading lab, absolutely check out our website. The tape reading lab has been in existence for over two and a half years now. We've been doing this program on the weekly basis with William. For that period of time, it's always fun to go through the market with William and just to interact and to figure out his perspective, my perspective, put it all together. And today we have a little bit of a treat for you. We'll talk about this once I see William joining us. Apologies for being late. I just finished with him the prep meeting, so he's online, but I maybe having some problems logging in. So again, for those of you who are interested, we are on summer schedule right now on Wednesdays. So weekly sessions, 125 per month. You could pay on the quarterly basis. You could use USDC tokens as well to pay on the quarterly basis. Then I also wanted to mention that we just came out of the Best of Wyckoff Conference 2023, which we conducted in San Francisco. The whole team was there, students were there. It was like a really, really fantastic event. Probably the top two best conferences that I've been a part of or I've been a creator, and was unbelievable series of talks, events. We had people that even after the first intraday workshop, they came to me and I remember Michael came to me and he's just like, if you stop here, he's like, this is the whole value, it's like there already. And I'm like, wow, Michael, we're just starting, we're just on day one, on lunch. So that was great. Okay, well, here's William. William, I'm talking about the Best of Wyckoff right now. Give me your raw thoughts on the event. Like, why would somebody, even after the event is done, we're going to be selling the recordings of the event, specifically of the intraday workshop with you, swing workshop with Bruce. But what was your overall feeling of the Best of Wyckoff conference? William?
Good afternoon. I had some audio issues, but I'm here now.
Okay. Yes. Question for you. We're discussing the Best of Wyckoff.
And what a fantastic event, Roman.
Absolutely. Yeah. So give us maybe some bits and pieces. Like, why would people be buying the recording? After the event is done.
Well, the knowledge, the intraday workshop with yourself and me, spectacular, very engaging, lots to learn, and also the swing shop with yourself and Bruce, absolute masterclass, I might add there. And also the Wyckoff talks, Roman, the Hank Prudin documentary was very, very emotional. I highly recommend that. I didn't know so much about Hank, so thank you for sharing that with me. And I'm an indirect part of that lineage, so that's kind of very humbling. But for the conference itself, was a fantastic event. What I enjoyed about the event, Roman, was not only teaching in a very nice environment, but it was to connect with like-minded Wyckoffians, and to share the experience and learn about their experience and learn about their interpretation of Wyckoff and their trading journey and how people found Wyckoff. And I think the good thing about the recordings is that you will see yourself and me within the intraday environment and how we apply our lens to using Wyckoff and our interpretation. And then if you go and watch the swing trading with yourself and Bruce, you'll gain a completely different perspective.
Mm-hmm.
So it offers great value. You know, you can like we said, you can take a bit from me, a bit from you, a bit from Bruce, amalgamate it, mix it up, and pick what works best and resonates with you. I think it is a really, really good.
Yeah, I totally concur. I mean, I still feel, somewhat emotional, somewhat a little bit tired.
Yes.
But at the same time, I mean, if you guys want to seriously work on your skills, those two intraday and swing workshops are just a must to have in your video collection. So I would at least at the minimum go for day one, and then day two had the whole team talk on different subjects with different exercises. Again, William was talking, Bruce was talking. We talked about the process. We talked about scanning. We had, Hank's documentary, which will be released, at some point for free, on social media. And then, all of the Q&A and speed reading. Oh my gosh, the speed reading session was
Well,
like on fire.
a lot of the students thoroughly enjoyed the speed. I was out of my comfort zone. You know, daily time frame, using
You seemed okay
candlesticks.
to me, going
No,
through the charts.
and that's the thing. I always promote, being,
Uh-huh.
teaching and mentoring. I always promote being out of your comfort zone because that's where growth resides. And I put my hand up, slightly out of my comfort zone, but I enjoyed it. I enjoyed the challenge. Great to see. And what I found unique about that is we had me, yourself, Bruce, and Alessio, and you can, because we only had a minute to go through a chart each, you could really see our styles and how different the styles were.
Yes.
And I think that really offers great value. Then we do 100 charts in 100 minutes or something.
We did 50 charts and
50 charts.
in about 50 minutes.
Wow.
Yeah. So like a 1 minute per chart, and we were rotating from one person to another. The same was the Q&A panel, which I thought was fantastic. I mean, just to get the ideas from, let's say, all 6 of us on different questions. And the questions were asked by people at the conference, right? So we've collected those questions on day one for them, to be answered on day two. And we also collected all of the symbols, with speed read charging, and even if it's still outdated, it's outdated already, speed read charging session, but you get the perspective of how people think about the chart, what are they going for, like right away,
Yep.
like
And that's the
Alessia would
value,
go
isn't it?
for, yeah, it definitely has the value, even, outdated like that. Yeah, so it was a fantastic event. Again, guys, just I can't reiterate this enough. At least buy the workshops because you will be working with those. And today we're gonna show you guys. We had two slides with William that we didn't go through. So today we're gonna do this. After we're done with our market analysis at around 10 or 10 o'clock, we have two slides for you to decipher. So stay on. Do not go anywhere after the market analysis is done, and we're gonna give you a couple of puzzles here. This is gonna be exciting, William.
Yeah, I'm looking forward to coming back to these charts.
All right. And then again, for those of you who's gonna join us, so make sure that you go under the live education, find Wyckoff Tape Reading Lab, sign up, and each week we are here to discuss the market. With that, William, let's do exactly that. So,
where are we going first, Roman?
All right. Well, I think let's just go to the markets. Let's just go to the S&P first.
Okay.
And, let's look at the big structure of where we are. I mean, everything is going exactly how we were kind of like perceiving it to go. So I think the biggest question that the market participants are asking right now, are we at this point are we at the structural point where we're going to reverse? I think that's like the social media question number one that I'm seeing.
Well, first of all, we have support we break down to here, resistance, resistance, we up thrust, we come down to make lower lows, form a very large trading range. And of course, this is the breakout right here. Very minimal kind of backing up action, which we spoke about, that we wouldn't be coming back down here, Roman, or even here, because of this absorption or this unique aspect of market behavior, which we've gone through many, many times.
Mm-hmm.
And so basically, this is a very strong breakout from this base. And where are we? Well, we're at this structural level. And so the first thing when we're approaching the structural level is what do we note about the advance? Well, I would say that this advance is strong. When you say, Roman,
Mm-hmm.
minimal reaction,
Mm-hmm.
minimal reaction. Yes, we have shortening of the thrust to the upside. We are approaching resistance. However, last time we was there, we reacted. We reacted. We have an up thrust. We come down. Here we're hugging, and I don't actually see great selling at this moment in time. We
Mm-hmm.
we're at resistance. We should see supply, and we don't. I mean, it's bullish until it isn't here, Roman. What other insights can you share with me here? I mean, supply has drastically reduced. However, one thing I have to interject here, Roman.
Mm-hmm.
I can see that the buying has run out of steam.
Yes.
You know? It's not
Mm-hmm.
like it once was. However, when we break out and we have this formation, who's in control? Well, the buyers are in control.
Mm-hmm.
And it's the sellers that need to prove themselves. Reaction one, reaction two, we come to resistance. Do we see any selling as yet? No. So as far as I'm concerned, selling isn't there. Yes, the buying's dried up a little, but the sellers need to take advantage of this environment, and they're not. They're not coming out at a key structural location. So
Mm-hmm.
that's how I'm
I
reading
would
this.
totally concur with everything that you said. I think the main message for me as I was preparing for this session, mentally, is just I'm going through the charts. I see that demand is definitely not as strong as before, but at the same time, supply is not present.
Yes.
So I think that what you've said about the background conditions, which are what? Well, first of all, in the background, you see in a lot of accumulation type of patterns, right? Whether this is just a stop in action, whether this is a change of behavior, this is a sprain or minor signs of strength, and then last point of supports. We're seeing in the background the buying on the way down, where as the price goes down, there is a lot of value associated with the specific either structural events or catalyst events, right? So for instance, banking crisis right here, or a sprain right here, or a stop in action right here. We're seeing how changes of behavior taking place throughout the whole structure, and we've talked, so much about this being an accumulation structure. Studying from May, I mean, like that's just kind of like a little bit too much, to comprehend that we said like we're gonna rally, and then it took us almost like a whole year to actually go into the rally. And then,
Mm-hmm.
as you mentioned, this area right here, hugging the resistance, David Wise's term, what was our expectation? What did we say is going to happen from that area? That we are probably going to come out and momentum is going to increase just because of the final absorption at the higher level that happened. So we had, 4 different types of, absorptions here. And now that we are in the established trend, um, you and I, we've talked about how this stride has changed, and
Yes.
it's changing again, and it's kind of like this third stride, and usually it's at the third stride that we would have some kind of climactic run.
Mm-hmm.
So now that we have established that, okay, we're still bullish, that's number one. Secondly, maybe demand is a little bit weaker than it was before, but it doesn't have to be very strong to push the
Mm-hmm.
price up if under two conditions, that the background is bullish, we have that, and that
Yes.
supply that's coming in is non-aggressive, and we don't see aggressive supply in this area right here.
Mm-hmm.
I think the question here is, if this is the third stride, are we already in some kind of speculative phase of the run? That's number one. Number two, how could we conclude this run with some kind of maybe climactic run? Number
Yep.
three, where would the price, go to? What would be the magnet for it. So probably we'll talk about the all-time high. And then we could switch to other indices as well and discuss the rotation.
Okay, I can offer a different perspective here, Amy. Can you
Mhm.
give me the chart? I've got my 60-minute chart up. If you
Oh
share
yeah,
the
of
screen with
course.
me quickly,
Yeah, sure.
because I think this offers. Can you see my screen?
Yes.
Because here we go. We're range bound.
Hmm.
We're in a nice trading range, and first observations are, look where we are. If you think of this is a nice axis line, we can see that we have a bit of price containment, come down, resistance,
Hmm.
break on through, it's acting as support. We break down, and now it's acting as resistance. So we're kind of right in an inflection point in the market right here, right now. You know,
Hmm.
we can see that we're getting a change of behavior. We've broken down. This buying here is not as good as that buying once was. Yes, we can see that. But as it stands, we are range bound. And if we have a look at this action over here, we do get an upthrust. I mean, it's not actually technically an upthrust, is it? But we see selling in a supply zone. We come down to here. What do you think of this overnight action here? It's kind of,
Nothing there. Very
yeah,
weak
there is nothing.
rally. There is no volume behind it. So yeah, I would be thinking after the volatility around the upthrust, especially with the analog to the July 19th, you kind of
Yeah, yeah,
would be
over here.
expecting, yeah, a reaction.
Yes. So as it stands here, if you think of, like volume, VWAP or something, this is an area. This is an important area for this market. And at this moment in time, look at the way that we're breaking down in this change of behavior. I don't really see anything. I don't see any great selling here. And as
Hmm.
we said from the background, we're in a trading range. Buyers are in control. Sellers need to prove themselves. We come up here. We can see that demand does dry up here. Like we can see, we're trying to break through here on much lower volume than the anchor point over here. So we know that this level is going to hold. So we are going to have some kind of reaction from here. So now the question is, where are we likely to find some buying? I mean, the logical place will be down here, right, within the trading
Hmm.
range. However, if the market is bullish, we should be holding, you know, around here. We should hold
Hmm.
a higher level of support, or maybe, in fact, that's a better level right here. This is where I'd expect the market to come down, have some kind of test. And if we hold this, that's additional strength. But you can see that we should get some kind of resolution today.
Hmm.
That we are kind of within structural places. Can we break through here? Or will this
Hmm.
hold? So as it stands, everyone's saying that the market's turning. I don't see it as yet, Rogan.
Yeah.
The sellers have not broken anything structurally. We're
Yeah,
range bound.
it's like I think psychologically it's very hard for people to wait. Because when we say like, oh, the selling is not there, wait until the selling occurs. How's
Yep,
it going to come? Well,
yep,
the volume is going to increase, the volatility is going to increase, the downward spread is going to increase, and you're going to have the directionality, to the downside. We don't see that yet.
nope,
I'm looking also at the analog again, this latest upthrust that you mentioned, and then the
yep,
week rally after that, and I'm
yeah,
comparing it again to the 19th and the 20th.
yep,
What happens after that week rally on the 20th? We have an increased volatility going into the
yes,
US session with
mhm,
increased downward spread. This is how supply emerging will look like. And I don't see that currently in
no,
today's session. If we were to mimic, to copy the same type of analog from that point on, we would have some kind of, you know, reaction to the downside. We do, but again, it's not that aggressive or as aggressive as it was on July
yeah.
20th.
Yeah, I mean, so right now for me, from an intraday perspective, this level, can we close above this level for today? And bear in mind that would show some strength. Bear in mind that for me to start having a bearish tone, we have to break this trading range. We have to produce that big change of behavior,
Hmm.
and really kind of slam down. Because at this moment in time, we are still range bound.
Hmm. Yeah,
So
people are saying, yeah, maybe the Fed decision today is going to change this picture. And yeah, I
yeah,
think it's a really good thought because,
it is.
usually going into the Fed decision, right, volatility decreases and then it decreases around 11 a.m. Pacific. 1 p.m. Eastern. So yeah, we should be concentrating probably more on the close today rather than what's going to happen even, during the session or after the Fed
Yeah, I mean,
decision.
there's an important observation. We can see that the price action is kind of muted here, can't we? So the market is waiting.
Yeah, yeah.
Okay.
Okay, well, usually the Fed decision days, produce volatility, and in a lot of cases, they could become the catalyst for a change, for a structural
Mhm.
change. So again, William, I think that the close today is going to be extremely
Yeah.
important in the context of what we're seeing. But let's come back to our charts and
Yeah.
let's, if we're done here, I mean, even if we have some kind of increase of volatility, what would be permissible in terms of, let's say, a short-term structural collapse here? In other words, where would the price go down and it still would be an uptrend for you?
Well, that's a really good question because where we are, I mean, the market has a lot to do because we can
Mhm,
come to here, still
mhm.
remain bullish.
Yeah,
In
correct.
fact, couldn't you argue that we could actually come back down to here
Yep,
and actually
I
have a
can.
backup to and
Yep,
still remain bullish? And I
and
kind
still
of
remain
like
bullish.
this. Why?
Mhm,
Because we can kind of capitulate, we can kind of, get liquidity, however you want to frame it, down here,
mhm.
and then boom, we'd be oversold in this condition as well. Come down here and rally over. So for me, we can still drop 300 points and still remain bullish, which is quite a drop. But at the same time, the structure is the structure. We can't argue. It
Mhm,
is what it
mhm.
is. Yeah.
Yeah. Okay, let's look at something else. Let's look at NASDAQ. And obviously, NASDAQ has been outperforming.
Yes.
Let's look at the whole structure. And remember how we've talked about the fear of missing out trade, right? So we've identified two different fear of missing out trades. Institutional, and that comes first because they recognize better conditions, and then general. And general would include both retail and late institutions. And I believe that we are here. We are in the second one. So it feels to me that the sentiment has changed drastically in the marketplace after we started producing this move right here, which is a
Mm.
lot of momentum. And this is all institutional. We could see that the volume has increased. So who would produce this type of increase in the volume signature? Only institutions.
Yep.
So if this is an institutional leg, whatever comes now in this area, it's this second part. So we are in that later stages where uh, majority of institutions already put majority of the money in. Maybe they are not fully in. I mean, like usually when I worked for the hedge fund, our goal always was like in the bullish conditions to be somewhere at 80% commitment with our cash positions, and then to increase it even more. Even sometimes to 90%, 95%, even to 100%. Just depending on specific conditions. So I'd say that institutions are mostly committed, and there is still some cash around, but it's probably more the liquidity for them comes from taking profits somewhere, and we're seeing how the tech is kind of stolen here. We're seeing increase in that selling, increase in that profit taking,
Yep.
and then increase in the result. But I think that the main question, William, here is with this increase in selling, and this is the argument that I hear in the last couple of days, from people. Yeah, but supply came, they took the profit, so I started taking profits as well, and that's fine, absolutely. Yeah, you have to take profits in the overextended tech stocks because these are the rules of the game. But is this dangerous, William? I mean, like in terms of the character and the structure.
Well, I mean, in terms of structure, no. I mean, we couldn't even look. We're holding a high level of support here after all that selling. Yeah, that's not synonymous with why no continuation, etc., etc. I mean, this was the key bar for me was this supply bar, Rowan.
Mhm.
Where did we go from here? Well, structurally, we're still sound. we can see that we do this breakout here. You know, this buying is not as good as the buying once was. We have this little kind of mini structure over here. We break out. We see some selling. The buying is not really there, but we're holding a high level of support. I mean, again, we still have a structure, but do I see that as threatening? Not as yet, because we're no, it's supply. We're allowed to have supply. Why? We look directly to the left. I mean, just look where we are, slap bang in the middle of this. I mean, you know, when I'm looking about when I see supply bars and I see supply into the market, I always look to the left and see, is the market allowed to find selling here? Well, yes, of course. And we see a little bit of supply emerging after a little bit of buying deteriorates, as we've noted. But why are we holding a high level of support here for 1, 2, how many days is that? 1, 2, 3, 4 days. That's not to say we can, you know, we can't come and break down, but it is kind of unusual behavior, wouldn't you say?
Mm-hmm.
After, like, there's no continuation.
Mm-hmm.
Look at all the other
No
big down
immediate
bars. Look,
continuation.
there's just continuation.
Mm-hmm.
All the other down bars, big down bars, there's continuation. Here we hold. So
Yeah, and when you
it's
think about the structure, you kind of start developing in your head, some of the scenarios. And my mind always goes like, what's the worst scenario here? Okay, well, the worst bullish scenario, right? Okay,
yep.
well, maybe we just go back, to the oversold demand line right here.
Mm,
And we do exactly what we've done before. We touch it and then we continue to the upside. Why? Well, first of all, there is enough causality here. I mean, like
yeah.
if we would measure the cause, this would be the minimum count, this would be the next minimum count, and this could extend more. But then there is more. You could extend it to the selling climax, you could extend it to the preliminary support, and you could extend it in the most aggressive counts as well. So the cause that was created by institutional absorption and buying for a whole year is quite substantial. So, and then also, William, what I'm looking at is here's another argument that this is not done. How about this, guys? I mean, just looking at the momentum of
Yeah.
the wave up, what is the character of this leg up? Is it aggressive or is it dull? And I would say that, William, it's probably more aggressive, suggesting
Yep.
maybe some pauses and then continuation to the upside. Momentum or institutional buying cannot end abruptly
Mm-hmm.
like that. So it usually has some kind of continuation that brings deterioration first. The conditions where around the all-time high, we're starting to see maybe like a climactic run, and we're seeing like that final move to the upside as, let's say, like
Yep.
major sign of strength at all-time high, and then a local buy-in climax. And on that local buy-in climax, you do have that emergence of the supply, and then you have a much stronger, more visible change of behavior, automatic reaction that is suggestive that, yeah, this is a more pronounced pause that we're going to have. So far, I don't see that.
No, I mean, when you're talking about the momentum, the way I about the aggressiveness, I mean, this is our first kind of angle of ascent. This is our second angle of ascent. So you can see that the buying momentum is actually increasing. So the
Mm-hmm.
buying quality is getting better, and I really like what you're saying about going attacking the all-time highs over here to the left, and because the angle of ascent will increase again to go into that climactic move, that classic 3 pushes up.
Mm-hmm.
But as it stands here, Roman, we can't argue with the market, and structurally, we're still sound. I don't think with the Nasdaq though, I wouldn't want to see a
Mm-hmm.
large
Yeah,
move down to here. I think that's slightly too big, and that would produce that change of behavior.
I'd say this is the area of interest.
Yeah,
This is the
I,
last in case of the demand, which creates the support line right here, support zone cluster, and then it also coincides with the overall stride to the upside.
beautiful. Yep, yep.
Mm-hmm. Okay. All right, let's go somewhere else. Let's go to Russell. And what a beautiful structure right here. I mean, like, I just love looking at structures and just looking at all of the different parts of the structure. So when we look at this latest structure, I would say like all of this is
This is
an
beautiful, though,
accumulation.
this one. This
Hmm.
is very good looking. Sorry, carry on.
Yeah. So I would probably label it like this: preliminary support, selling climax, upthrust action, secondary test in phase B, then quite extensive phase C behind the banking crisis, and then on its own, it has its own phases, right? So local phase A, B,
Hmm.
and then C probably like almost like that. Sign of strength, local, again, backup action. And then we said that, when we left for the best of Wyckoff 2 weeks ago, we said that our expectation is that we are going to be here because of this slight intensity on the last bar. We're going to have a retest. We did that. So that was perfect. And then after that, we're going to start moving where? Now we are moving to this 2 points.
Hmm.
This is our target. This is our goal. So I guess, William, like looking at this approach and comparing it to the previous two, what would be the comparison for you here? Is it better? Is there less supply? Is it more reliable in terms of like prognostication for more upside?
That's a very interesting question here, Roman. And I tell you what I like and why I like it. It's the background.
Hmm.
We here this breakout. We effectively come from this, don't we? I look at these as kind of three different structures.
Hmm.
Okay. So this structure, look at the volatility, look at the spreads, look at the way we're kind of erratic coming down. Here we have a nice little kind of uptrend, but we can still see it's slightly volatile, little big spread bars. But
Hmm.
here, when we come down here, when we form this trading range, and look at all this volume here, isn't this a beautiful structure? This feels contained. This feels like this feels like the market has made its mind up and we're bullish. Like
Hmm.
all of this is erraticness. We can see that from the volatility. It drops down here, even though we're having a lot of volume. Wouldn't you say that this structure is kind of sound? The volume spread relationships here, everything's on point. I really like the coherentness of this piece of structure. So the fact, to answer your question here, so this structure over here, I think it's clear to see the causality, right? First of all. So we come up, we break out, we test. We come up, we test the king, and now we break out. Now, the breakout we can see does declining volume. However, one, we come up, react. Two, we come up, react. Three, we come up from the most bullish background and we hold sideways.
Hmm.
So what does, analogs alone, what area here is more bullish? One, two, or three? Well, clearly three.
Three.
That's not to say that we can't come down to test here, but
Hmm.
instantly I like this approach. One, the background, and two, the analog at resistance.
Yeah. Well, I can't say anything, more than that. It's just like my analysis would be kind of the same. So
Okay.
the approach is much better. There is less visibility of the supply that's coming in.
Yep.
The holding of the price is much better. So we would be assuming that either, some kind of attempt to react first,
Which is
and then we would be thinking like, okay, how does uh, current reaction, holds in comparison to the
yep.
previous instances, if this were to happen, and then how quickly it could recover
Hmm.
and go up and break this pattern.
Hmm.
Um, and at the same time, maybe even better,
Yep.
approach of something where we don't even go to the support, but just like hold on here and then continue to the upside and breaking through.
I mean, strategically, you know, I'd be wanting the market to come down here to look for a potential
Hmm.
kind of swing trading opportunity.
Yeah.
If we
Hmm.
can kind of disconfirm supply on the way, but because I mean, look at the supply, it's dried up. Look at the buying. Buyers are in control and establish themselves. See, I know we don't break out of here with all great volume, but we don't have to because all the supply has been absorbed. So the fact that we're holding here, the market has the right to come back down here and test, or if it's very strong, we hold that higher low, and like you said, we continue north. So this is unfolding beautifully as it stands.
Okay. All right, let's go to the Dow. Dow is obviously in a lot of news because of the rotation. I mean, when you look at the industrials, materials,
Oh, wow, look at that.
it just, there is no comparison to anything else.
The
Mhm.
non-correlation still amazes me with these markets, right? I mean,
Yeah, it's unbelievable how, 4 indices, 4 different structures,
yeah,
and all of them are just like so unique in this period. Kind of the same idea of different environments: bullish, volatile environment, bullish, less volatile environment.
yep,
Even when you see and look at this pattern right here, and you have your, typical, head and shoulder from the conventional technical analysis. For us, Wyckoffans, we would be thinking, okay, this is an area of the stopping action, so therefore buy and climax trading range. A change of behavior that suggests the change of the environment from the rally into the trading range, which we would label reaccumulation to be confirmed or to fail.
hmm
And we are starting to go through the trading range and finding the ways to either confirm or for this pattern to fail. Minor sign of strength out of the lower low, which actually, becomes a very, very important point here on this demand line. And then comparison, and this is what we've been doing. We were comparing the reactions
yes,
in this trading range. And what do we see? How many times throughout this last year on different
hmm
market structures we've talked about this concept of verticality and the concept of the lowering of volatility for the bullish condition to come to the timing of when the price is ready to leave.
yep,
And it all coincides, the structure and volatility. It shows you, it gives you that timing tool. Look at the verticality of the first reaction, of the second reaction, with the lower low as the result. Then we go into the higher low, volatility decreases, verticality decreases,
hmm
and we are only retracing 1/2 of the previous rally.
yeah,
And then obviously the last one is the best. And we've
yep,
talked before going to the best of Wyckoff, we said, this is better than this, this, or this.
yep,
Why? The structure happens a little bit higher,
yeah,
above the resistance. We had one close that was the best
hmm
close ever. And that is such a subtle clue right there, but you have to, see this to believe that we are, even if we're going to go into the reaction behind, let's say, diminishing supply, this is going to be more of the bullish story rather than the bearish story developing.
hmm
So, and I'm just really happy to see how behind the rotational forces, the Dow is producing, what is it, 13 days now straight up if it
that
closes up today?
yeah, that was going to be my comment. I mean, look at
Hmm.
this. We have the most consecutive green days in a row on this chart, and
Hmm.
look at the environment. What's behind us? Causality. I mean, isn't this picture perfect? Isn't this
Yep.
exactly what you want to
Hmm.
see?
Hmm.
This is just wonderful. But another thing here, Roman, I remember that we spoke about this decline, and we said it would come into this area, and it did
Hmm.
test picture perfect. And we also said about this reaction, if you can remember, is we have a lot of volume here. We have a lot of selling, yet the movement is restricted.
Choppy. Hmm.
Means there is hidden buying. There's
Hmm.
buying going into this testing action of this high volume. And that's why we get this move like this. We break out on how many bars does it take to come down? 20, 25 bars. How many bars to go up? 8, 9
Hmm.
on the same volume, which means supply has been absorbed here very cleverly, coming down into test. Then when we get to that reaction, we make the higher high and we hold this kind of trading range where we react, we react.
Hmm.
And again, this is some kind of little absorption. Then we break out. I mean, all
Yeah.
of this, we kind of,
Hmm.
from this hidden buying over here, the cumulatively volume here, with all that volume, why aren't we moving lower? Well, there's only one force can stop us moving lower, Roman, and that's buying.
Yeah.
And this was proof of this.
Well, I guess the question here, let's say like right here where we
Yep.
are,
hmm
again, because It's kind of interesting how the sentiment changes throughout the uptrend and the establishment of the uptrend. At the beginning, there is a lot of disbelief. No, it's not uptrend. It's just the rally in the bear market. Have you guys heard this? How many times have you heard this? Right. So that's number one. Then, when we finally have those breakouts, like for instance, this type of the breakout, then what happens? Then there is a fear that maybe we're already close to the end of it, and maybe I shouldn't invest. Maybe I shouldn't be buying, all of those positions. So your mind always plays tricks with you and brings you the best argument that is probably going to be based on fear of something, not necessarily the truth. So the question here becomes, are we done or are we not done? The way how we define this is by the character and the result, and that's what we usually do. So look at the current extension. Is it a good extension above the most recent resistance? Yes, it is. Okay, how about this? Did the previous reaction came to a logical place? Well, we stated that, this is a very, very important line right here, but also on the previous rally, we had this very important bar with a lot of buying. So here is your cluster, and then this gap, also very important. Here is your cluster right here. So the background, immediate background is also very, very positive.
Yep.
Also, if you would be thinking like, okay, well, this is the rally, this is the rally, and then this is the rally, and then William has shown this consistency of the demand. Let's just say like comparing these two rallies right here. What do we see in terms of the presence of the demand? Are they willing to buy more at the higher level now? And from the volume signature, it seems like they are.
They are. Yeah.
Because, and why would they be buying at the higher prices on the breakout, which extends the result of it? Well, because they see the potentiality of higher prices. And therefore, our conclusion here is that they're still not selling. Instead of that, they're still buying. And make your conclusions out of that.
Well, it's quite interesting. So if we sorry, if you can compress the data a little, because where we are right now, we're here, and that is the volume. Okay, and we've approached here on very.
Nothing.
We are
Nothing.
going. Basically, we're not breaking through here. We're not. And especially we've got that to the left, that to the left, that to the left. We can see the supply. So scenario one, because we are bullish, we hold here and absorb. We have a mini trading range, or we come back down to test here. I think this is kind of logical. We could bounce maybe. So we got scenario one, high low here, absorption, or we come back to test here. And if we move up, we kind of get that demand confluence picture perfect. But I don't expect us to break through here. I expect a trading range, although the Fed, it could be a catalyst. It could prove to be a catalyst. So, but as it stands,
for those of you who are following the Fed, and Bruce and I will be talking about this in WMD today. I mean, my argument with the Fed increase, let's say increasing today by 25 basis points, or even some people are saying like, oh, it's going to be 50 basis points. Okay, that's fine. Does that influence the way of how businesses or people borrow the liquidity, borrow the money? No, because whoever cannot borrow the money at this point, they will not borrow it anyway, even if there is an increase. So I don't see, another 25, 50 basis points as a huge catalyst to why the market is actually moving up right now. So I would say like it's almost like a non-existent, non-effective event that people are talking about, and I mean the Fed's meeting today.
Excellent.
All right. Okay, let's go somewhere else. We're at 9:45, so we have 15 minutes. Where do you want to go next?
Oil, because oil's
I was about to say oil, yeah.
Beautifully. Absolutely beautifully.
Yeah, I mean, it's kind of unfolding exactly to what we were saying, right?
Yeah.
So let's just kind of review slightly, like what we were talking about going
I mean, look at that.
into the best of Wyckoff. So we stated here on this bar that we are going into a bullish environment. Then we said that this is a terminal sprint, and we were expecting the rally that would extend a little bit more. It did not. This supply on OPEC news suggested that we're going to have the reaction. We stated that this reaction is going to retest the terminal sprint, and we said that this is the most important bar on this chart, and
Yes.
this is the most important line right here.
Hmm.
As the price will be below this line, we are basically in the downward bias. As it will be above, we are in the upward bias.
Hmm.
And we stated also that we're going to have a test here. And then after this supply, after this slight increase of volatility, we said that we have three zones here. One, two. One is bullish test, a bullish low volatility test. The second one was increase of volatility just in general. And then we said that the third test, the third environment will be still testing and still approaching the most important line, the downward, sloping resistance line.
Yep.
And that volatility is going to go down. And from that lowered volatility and ability of the price to test and then come back to this line, we're going to have some kind of breakout.
Hmm.
And it's exactly how it's happening, William. The
Yep.
only thing that I would add to this, that after looking at the volume signature, supply is still a little bit dominant here. It's definitely dominant here. So it's like supply is dominant over the demand, but the main thing about this is that the downward result is
Yep.
actually diminishing. There is nothing there. And then a significant change where demand becomes really, really strong and
Hmm.
overcomes the supply in a very meaningful way. And we're starting to extend. So I guess we're just interacting, and all of these conclusions that we have had that have led us to this analysis, they just materialized. It just took a while.
Yeah. I mean, we've been kind of bullish, well, uber bullish from here, right? Like, I'm ready for a move because
Mhm.
this is complex testing. We saw this by buying, 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 buying. Then we come down here, and for me, Roman, it's just like that bar, that volume, effort versus result. Huge volume coming in here, no follow through. And then so one to two to three. Then over here, we come down on lower volume, and we're closing off the lows. The supply bar there is much smaller than it was over here, and this was the right environment for us to push on through. Okay, and then we do, and then look at this, this kind of other axis line here, and this is a wonderful axis line. Look how kind. So we break out, beautiful, and then look how we react and test here. I mean, this
Mhm.
is just beautiful. If you're involved, show me that the best of Wyckoff conference here, Roman. There's an
Mhm.
swing trading opportunity here, and then we push on up here. Now this is going to be incredibly hard for oil to overcome. Right?
Mhm.
We have a supply confidence. We've got the supply line and obviously this level of resistance.
Yeah,
Ah,
I'd say it's this bar right here that bothers me, because this is where a lot of supply has come.
yep,
I mean, obviously this still needs to be overcome. There's a lot, to work
yep.
through,
Hmm.
but this is the one where they sold a lot.
Now, what's interesting here, Roman, if you can remember me talking about that complex, remember on the S&Ps where we have the high volume and it didn't go
Mhm.
anywhere like this,
Yes. Very similar.
the resistance level, and now we have the buying's better.
Hmm.
Same here, but look what the buying's achieved here with oil. Within the S&Ps, we're still going sideways before we broke. So analog wise, this kind of behavior, I know the context is different,
Hmm.
but the premise is still the same with the volume. And now, so this is actually more what I'm trying to ascertain here. This is more of a bullish kind of scenario than that
Hmm.
of the S&P's structure
Yeah.
point. Yeah.
Well, it definitely looks bullish. I guess the question for me is just like, okay, usually when when you go through the accumulation, right? First, you talk about what? You talk about the preconditions. Then you talk about the change. Then you talk about testing. Then you talk about breakouts. So everything is developing like, step
Yes.
after step after step. So it's all beautifully unfolding, and we're following this so precisely.
Yeah, I
So
mean,
everything is great. But
this is quite an easy market from here, really.
mhm, yeah,
Uh, yeah, I mean,
mhm.
it's just
Yeah, the only question mark I remember we had is here, right? Would we start committing down, or would we actually
yeah,
stay? And we said that most likely, even at this point right here, remember when we were saying like we are in the trading range right here, we're just
yeah.
going to test, because this type of supply required more testing, and because of how much of the supply is here, the testing duration needed to be increased, and that's
Yeah.
what we're seeing here.
And
I
this is
guess my
complex testing. This is complex testing. There's no
Yeah,
question about it.
complex. Yeah, for sure.
Yeah.
Yeah, three different environments there and so on and so forth.
Yeah. Yeah.
The question here is, do you think that we might kind of like retest here more before we go up, or
Ooh.
alternatively, would we go up almost immediately? Because that's the only interesting question for me
Right.
here in oil, because everything else
Okay.
is kind of visible.
We're done here. Does the market need to come and test this area after
No.
this? No, we don't. And in
Mhm.
fact, we've broken out, and this is our test. Look,
Mhm.
look at the supply. I mean, it's the lowest volume down bar we kind of had from over here, and we've broken out. It's telling us no supply. And then we do get a little bit of a little red bar instantly negated. We push on up. Look, beautiful. So this is bullish environment. Now, sorry, if you just compress the data, because I believe we have a very crucial axis line. Is it around this level? Yeah, there it is here. This got 95 in and around here. I think that we won't come down to test here. I think we're going to try and push. I think we're going to have to absorb and then push it up and break here.
Mhm.
Come to this area. Now, will we overthrow? Will we upthrust, etc.? Because then what's interesting is when we get to this level, what have we printed? Well, we definitely have our kind of change of behavior here, don't we? Our breakout of the macro structure. So then from here, the market has the right to come back down to test it. You can see, I can see how this market is going to unfold, Roman.
Mhm. Mhm.
There's a few. I'd say the what would be your favorite bullish scenario here?
Well, exactly that. And I mean,
Yeah.
like we've
Okay.
discussed this scenario. Let me just increase the size here.
Mm.
When we made one mistake with this rally, right? So it's like directionality. We got that. We didn't get correctly the extension of it, and we said, and I was
Oh
thinking about
yes.
this because William, these things, as you know, and for yourself as well, it just like it tortures me, right? So I keep like dreaming about those type of mistakes. uh, we said that we're gonna have this. We're gonna have
Yes.
this double, bottom, and we're gonna have this type of rally that will come. $100 is a really great magnet right here for multiple purposes. As William has said, this is the most important access line because
Yeah.
of the initial change of behavior, last climactic run, initial change of behavior test. Then we have the break, that access line that it becomes an acts as the resistance. It did not act as the resistance, so that was like this mistake. So here, I think that's exactly how you drew it and how we want the price to unfold.
Mm-hmm.
I mean, you just went one step further. I just want to say, like, we probably just because of this area are going to have like ups and downs, but then
Yep.
still continuation to 100. I would prefer actually slight extension to 100 over this axis line
Yep.
because that would show more strength. And
Yep.
then, yes, absolutely. In so many analogs from the past, we see a change of behavior going into the backup trading
Yep.
range,
Mm-hmm.
which is going to have maybe like some kind of like the lowest low and then, some kind of test and then continuation. So a high low test, like if we're talking about this area right
Yeah.
here, and then just continue going up. And that's it. This will represent another buying opportunity, as will this one right here.
Mm.
So, if you're trading oil right now, I think the main things, or the couple of main things here to consider is, first of all, bullish environment, directionality is to the upside. We are in the emergent change of behavior.
Yep.
And what kind of trade do we have available here? I would say, William, that we have a swing trade available, which could be really
Yes.
good
Yep.
because of the potential increase of the momentum in this wide space. There is nothing here.
$20. Yeah, that's
Yeah,
exactly it. When we're talking
yeah.
about timing and efficiency, and we're talking
Hmm.
about white space, there's a
Hmm.
$20 move here. You know,
Yeah, it could happen like in
that's
5, 7
substantial, right?
trading days,
It's a
and
vacuum within
you're
the market.
making
Yeah.
that much. Yeah.
Yep.
So, and then after that, you have to think like, okay, take profit here, maybe write the counter trend to the next buy opportunity, then go into the mode of trading the trading range, and then right here reestablish a long-term or swing campaign for a much larger swing, which will go where? Well, then if we're doing this, right,
Mhm.
where would we go next if we break out? Well, as S&P has done so, as
Yep.
other assets have done so, coming out of the long-term causality after the bear market to the all-time high. So there is a lot of room here for oil, actually, to advance. And there is, William, there is enough causality here
That
as
was
well.
my next question. I'm sure
Mhm.
you or Bruce has done some kind of PNF count, but I can just eyeball this with my crude length of line. There's enough
Mhm.
causality to get up to here.
There is
No
enough
problem.
causality to go
Yeah,
all
no
the way to
problem.
all-time high.
And what's
Absolutely.
interesting about this behavior as well, I mean, not only, we got a reverse use of trend line, by the way. So we're drawing the
Hmm.
support levels first. Then we're adding the parallel. So usually draw the supply
Hmm.
line first and downtrend. But when we break out of here and we come to this axis line, we're actually in a new environment, aren't
Hmm. Hmm.
we? Because not only are we breaking the trend channel environment, we're also breaking this structure. So this white space. So conditions are going to change, and we have to be aware of that. We've got white space. I mean, if we break through this kind of confluence here, we could move, and crew does like to do this. We could move very quickly to the area. I don't think it would be laborious. I don't think it would be grinding and slow. I think if we can navigate this or have some little bit of absorption, boom, we'll break up very, very quick. Get going, like something akin to like this. Um, but also as well, the additional strength here, Roman. Can't test, can't test,
Hmm.
can't
Hmm.
test the oversold
Yeah.
condition within the trend channel.
Hmm.
There's all these subtleties of strength here. Very
Hmm.
interesting asset to trade here, crude.
Yeah, yeah. I'd say like beautiful structure.
Yeah.
And just going through that was a lot of fun. So
Mm.
right now it feels like, yeah, we're just
And
riding it.
and you're trading above that blue line. Is that a 200 or 50 or
Yeah.
100?
Oh, yeah. I forgot to mention. Yeah, I
Yeah.
put it today just because to show people that for the first time in the
Time.
bear
Yeah.
market,
It's
we are
important.
above it. Yeah.
Yeah. Okay.
So a change of behavior just based on the moving average. All right, so we are at 10 o'clock. So maybe like one more asset and then
I'll
we'll
let
go
you
into
do the
the asset.
beast. You like the beast.
The
Bitcoin.
BIST. Okay. All right, let's do the BIST. Okay,
Oof.
so overall global structure is still to the upside.
Yes.
We see how we still have room even to go lower here. When we left for the best of Wyckoff, we said that we are in the trading range. I would define it like this probably.
Mhm.
And this is where we are. So could it go lower? Yes, it can. It could definitely go lower to this point. It could go lower even to 26, and
Has the
still
right
it
to do
would be
that.
bullish. Yeah,
Yeah, it has the right
why?
to do that. Yeah.
Yeah, why? Because of this, and because of this, and
Yeah.
this. So it's still all there for us to consider as a part of a much larger global structure. Because if we're thinking that this is a major sign of strength coming out of phase C, then could we potentially have a trading range structure, which is a backup trading range? Yes, absolutely. Could this
Yep.
trading range unfold, in a more complex way? Yes, it can. when we look within the structure of this trading range, I mean, obviously the most important bar for this trading range is this one. It kind of defines, this line. It's the breakout out of this structure, which is still bullish. I mean, like, look at the extension of it, the extension of the breakout. When we look at the reaction, there is nothing threatening here in
No.
terms of the selling, shortening of the thrust. There is not enough supply. Supply is extremely low. Then we have demand emerging. Yes, demand is increasing locally, but demand also is decreasing globally compared to the previous buying opportunities that we've had 1, 2, 3, 4 before that. But still, demand dominates supply at this point. We're holding for a long time, and even when we go down, like this last bar, I keep receiving, because we've been bullish on Bitcoin. I mean, since last year,
Yeah.
and
Please.
yeah,
Yeah.
people want to sometimes prove us wrong because that's how they feel. They feel better about themselves, if they do that. It's very typical on social media behavior. If you guys do that, catch yourself. It's very important to be aware of yourself as a trader rather than just like be so unconscious and just bombard everybody with just like those type of ideas. And the whole idea about this latest decline is that, well, I told you so, it's bearish. I don't see it as a bearish yet, even if it goes down, William, to this
No.
point. In fact, I would love it to go down here
Buying
because
opportunity.
it would, yeah, it's a buying opportunity.
So simple, right? Yeah.
It's a shakeout for weekends. Like, why not?
Hmm. I mean, we've got the analog as well to work with. We've got this kind of decline. I mean, it's clear to
Hmm.
see there is severe shortening of the thrust to the upside. I
Hmm.
mean, yeah. I mean, yes, there is. And we look at this breakout, we look at this breakout, and this breakout didn't really go nowhere. We did speak about that. But, this is the low, that's the high. As it stands, we're only retracing, what, 20% of the move from the low to highs? it's it's still nothing to be concerned about as of yet. And as you said, we have the right to test down here. So until the
Hmm.
market tells me otherwise, do we?
Yeah.
You know, look at the supply that's we can see is in the market. Okay,
Hmm.
previously there was just nothing here. There's
Hmm.
still nothing. So
Even if we go like closer, right? So, okay, couple of days ago, people were saying like, okay, that's it, we're breaking to the downside. Well, okay, let's look at this with more precise vision, right?
mhm.
How is this breakdown? I mean, does this extend on the close? Does this even violate the low of this bar? No. And what's the immediate follow through? I don't see any.
No,
So, I mean, even if we go down more, still, until it shows aggression by maybe breaking this bar, because this is the most important bar.
yeah, I agree. I mean, look at the
Yeah.
volume here. Yep,
Hmm.
which we've already come over and tested. Already. So
Yeah.
eh,
That
it's
would be
got a
the
lot.
level to break and then go bearish.
It's got a lot to churn through because we've still got these two high volume bars here, and we're
Hmm.
approaching this area on pretty low volume as it stands. So,
Hmm.
I think we could hold down here very comfortably. Again, sellers haven't broken anything structurally for me at
Hmm.
all.
Yeah. Okay. Let's go quickly to gold because there is a question about gold.
Okay.
Who's
Ooh.
asking? Derek is asking about gold. Okay. So what's your quick take on gold here? Which actually is probably the most interesting chart for me right now.
Yeah, I mean, this is definitely the most challenging.
Yeah.
Yeah, I mean,
Okay. So let me ask you this question. Why is it challenging to you?
well, because I don't really see. I mean, yeah, we have a change of behaviour.
Hmm.
We've broken this demand line from the trend channel, but I don't really do I see any good quality selling? No. Why do I say that? Well, I mean, this is reaction one, and this is reaction two. Like the selling has actually deteriorated, and we're coming in and we're just testing this high volume over here, and we're doing so on significantly lower volume.
Hmm.
So I like the fact that we came here, we found some good buying. We're in this area, we're trying to react, and volume still reduced. So I think we are kind of range bound at the moment here, Roman. I think we're range bound. The market could come down to here, but the fact that we held here, we've tested this high volume. I mean, it's quite a nice, if we draw a trend channel like this, we have a mini cob here, and that's the selling we're met with. It isn't particularly great. It still feels a bit bullish, although I'm not saying I wouldn't be trading around here. I think we could come down to here. Okay.
Yeah.
But,
Yeah, I'm kind of coming to the same conclusion, maybe, almost the same way, maybe a slightly different way. So the biggest problem, let's say, like with the bias game, by the way, for those of you who are not familiar, with the bias game, guys, go to our website, go to the Twitter. The weekly bias game is always there for free. So you could do the assignment slide, then go to the solution slide, and just educate yourself through that exercise. So the biggest problem that I see with students as we discuss, those bias games of structures, or the biases within the trading range, is the comparison of the global structure to the local structure. And I would say that the local structure for me is this. Here's your change of behavior. This is the largest reaction in this, since the banking crisis that introduced a lot of demand. And then what happens afterwards? Well, we're in the mini structure here as well. So here's my local structure. I see a change of behavior, and then I see testing. And how do I interpret that? Well, we don't even come to one half of that. So this is a breakdown bar. We don't come and overcome that. And we don't do that even on the increased demand. So effort is increasing locally to overcome this line right here, this selling zone, and yet we are failing. So this is a failure locally. So that is suggestive of, like, if I don't overcome this, yeah, I might actually, go down to this next level. Okay, then global look of it is that this was a huge change of behavior that defined the change of environment into a trading range from an uptrend. And here are the lines, right? So buy-in climax, automatic reaction, here's your trading range, here's the height of the trading range. And then we're seeing a very, very bullish rally. We see ability of the price to stay above the resistance, extend, and touch multiple times the long-term resistance. And with that, this is a bullish character, and this is a bullish structure. So we have a global bullish structure with the possible local short-term weakness. And that's how confusion, populates the minds, like, one person just sees local structure, one person sees global structure. And there is always like this confusion and argument. What if you guys just like look at both and combine them, and just look at this analysis, in a more comprehensive way? So to me, William, it seems like, yeah, I don't see any trading edge here at all. I really would like it to go here, and then to me, it still would be bullish, and just to see would it recover from here, and that would be an opportunity. This is a swing opportunity, but this is a long-term campaign opportunity right here, which I would be, more attracted than any of the small moves right here.
I mean, look at the volume down here in this area and the approach to this area for potential trading opportunity. It's going to be quite evident. If we break down here, we just come with average volume, my eyes will be peeled if we get down to this kind of 1800 level,
Okay, I want to play a game because I'm bored a little bit. Okay.
Charming.
Yeah, as usual. Okay. All right. Yeah, that happens often. Yeah. Okay. So I'd say if, under the condition of if.
Yes.
If the price goes to support. Right here. You just stated that, you want to see like this decreased volume signature, decreased supply. And I'd say, in my case, I would love to see more aggression to the downside.
No, it will end climactic. into
Yeah,
that area.
I want to see this.
Yep,
I
it
don't
will
want
end
to
climatic
see
into that area.
I don't want to see decrease of the supply. I want to see increase of the supply. And if here we started with selling, here I want conclude with selling. So I want to see that, local climax different from what we're seeing here, because this will produce one thing that so many traders are afraid of: fear. And that fear is going to create liquidity, and that's going to push the CO to buy. And if that happens, then we're going to see the evidence of the stop in action, which is being followed by the reversal. And that's what we want to see.
Okay. But
Is it the
still,
game? No game?
well, okay, the game. Well, I mean, I see the market coming down. It will come. It will have no supply characteristics, but it will end climactic into this.
Mhm.
It's that formation or that pattern that I talk about and trade with an intraday environment quite a lot. But the volume won't be anything like this.
Mm-hmm.
But still, though, this is a story of two halves. I still don't see a great supply here.
Yeah,
It
I
has
agree.
dried up.
Yeah.
I mean, I can just see it.
Mm-hmm.
It has dried up.
Yeah, yeah. Yeah, my only problem here is with this rally. I
Yeah.
mean, like, you have the best demand, and then what does it
Doesn't
produce?
achieve anything there.
Doesn't do anything relative to this bar and relative to this high. So
Yeah.
we'll have to see. But like, again, could there be a more bullish scenario, like, of, let's say, like, what if the structure is just like we stated before, like, I'm seeing a trading range right here.
Yeah.
So that's fine as well. Okay, so, like, okay, go up. I don't see that this rally has like this very huge change of behavior characteristics. So this would mean that we would have to go back again into maybe like the access line right here, which is the stop in action here as well. So yeah, do this, and then this would be your buying opportunity right here if this unfolds. But,
Yeah.
like, as of here, what is your edge? What is your edge? To go to the upside, maybe limited upside. Go to the downside, maybe a
There's no
better
edge.
trade to the downside if you have some confirmatory signs, signals that it's going to go down. But there is no edge right now.
Sorry, but if it's just to finish this chart up, if you compress the data, we can see that this reaction over here, I mean, look, compared to 1 to 2 to 3, I mean, this is
Better.
definitely the most, this is
Yeah.
clearly the
Yeah.
best reaction thus far.
And this rally is better
It's
than this.
exactly. So,
Mhm.
although we're doing the bar buy game, we're getting close. From a macro perspective, we're still bullish. The market has every right to come down here and test this high volume. Why not? In fact, it looks a lot more appealing when you just compress the data like that. Doesn't it feel like we should be coming down here? But that's an up
Yeah.
thrust.
Yeah.
Yeah. And
Yeah.
we're gonna knife through there, probably come down to here.
Mhm.
Yeah. Okay. Yeah.
Yeah. All right. Let's go to our exercises. Again, this is something that we didn't do at the best of Wyckoff. We had two of them that we didn't do. So this is the look of the workshop. So for those of you who is going to buy the recordings, you guys are going to receive all of the slides from us, the assignment slides and the solution slides. All right, William. So what is the task here? What do they need to do, and how much time are we going to give them?
Well, on this chart, we have to determine, I guess, whether it's accumulation or distribution.
Mm-hmm.
And for a potential trading opportunity, Roman. Oof. I mean, what, from this cutoff? That's
Would you
quite.
trade this? Wow.
No,
Okay.
I don't think I could trade that.
I could definitely trade that. I mean, like, I see some things that
I,
are going to be interesting in the context of, like, what kind of trade would you decide on here? So why don't we give our audience, what, like, around maybe like 2-3 minutes
okay.
to think
Yep.
this through?
Yeah, we'll let people have a look at this chart, decipher it, and then.
Yeah, I don't want us to give any clues here.
No, no.
Yeah. So what are we gonna do? Like 2 minute for them
Has,
to decide?
has this chart been cut off at the right place? I'm not sure, Roman. Uh,
Well, it doesn't really matter at this
It
point.
doesn't matter.
Yeah, it is what it is. Okay, guys, do your analysis, do your, global analysis, local analysis, combine those two together. And then I think the main question here, is there a trade here? Is there a trading opportunity here? And if there is, then what kind? How would you approach this? All right, so we're gonna go silent for maybe like a minute or so.
Mm-hmm.
By the way, William, I'm thinking here,
Mm-hmm.
because people are starting to comment, like on what they see as a bias. Okay, so obviously bias is going to be either for you guys accumulation or so just either accumulation or distribution, right? So that's a question number one for us to decide. I think the question number two is what are the trading decisions, right? So somebody's writing like, oh, I'm gonna wait for the test.
Okay.
We are asking you to make a trading decision on the last bar. Okay, so if you are saying that you want a test of something, this means that your decision is not to buy and is not to sell, but to do nothing. Okay, so you could, in your answers, you could state this accumulation, and let's say option number 1, 2, and 3, and do nothing, right? Or you
Mm-hmm.
could say accumulation, buy. You could say distribution, sell, or distribution, do nothing.
D, either A123 or D123. Yeah.
Mm-hmm. And then maybe even give us your perspective. I mean, because some of people are saying like, oh, I would be buying here. Okay, well, why? Why would you be buying here? Or some of you are saying like, I would be selling here. Why? Why would you be selling here? Like, what's the reason? Okay, so and let's start reading this a little bit. Okay, so accumulation, global distribution, local stop in action, no trade for me yet until trading range unfolds more. Shortening of the thrust, volume decrease, stop in action buy from Montal. Shall rally from here, from Stinley. Change of behavior. I don't see a change of behavior here, by the way, Arman. Waiting for the run to the ice for a trade up thrust, weak rally, no demand bar. I see, so I think that, there is expectation for the rally to the ice. Buy, if I were in the position short, then I would consider exiting from Tom. Accumulation looks like it's sprint, go long. Accumulation buy.
There's no spring there, by the way.
Yeah, there is no spring. There is a distribution with the up thrust action followed by the last point of supply. There is strong downtrend. There is a lot of selling leading to the climactic run. I expect the automatic rally and therefore could be a counter trade to this with a smaller contract size. I would buy Iqbal aside. Like, see, like, whoever was at the conference at the workshop, they're like, they get it. They understand. Okay.
Yeah.
Distribution. Eric C is saying like something very interesting. Distribution. So selling. Okay. Iman's is saying, okay, accumulation. Jim is saying shortening of the thrust, buy.
There is short of thrust. Good observation. Yep.
Mission, I'm sorry if I mispronounced the name. Distribution, no trade for me. Okay, distribution, but one, Eric, not full understanding. You're saying it's a distribution, but still, oh, I see. You're saying it's a counter trade. Okay, got it. I would short the backup. That's all I see. Can't
Okay.
ascend distribution. but could buy for a scalp as price exceeds the high of the 2 bars back, okay, which equals the close of the last. Okay, good. Vitaly is saying, okay, change of behavior. So this is phase A, probably. Okay. Brad is saying distribution globally. Okay. All right. All right. Well, okay, guys. Yeah, quite a lot of answers here.
Yes, good to have
Um,
participation.
mhm. All right. Well, let's discuss this analysis. William, I would say like let's start with the global structure. What do you see on the global level?
Well, there is a high here, yesterday's high, that has an upthrust. We come down to this support level. We hold. Well, technically we spring. We can't even, test any highs. We make a lower high. We come down here. Look at the buying, pull, sell it engulfs. Then we knife through here, this support level. Weakness, up thrust, spring, failure of spring. Look at the selling come into market as opposed to the buying. Sellers in control. Right, we're coming down.
Yeah. So
Uh,
distribution followed by a downtrend.
and then look at the manner in which we come down, Roman. That's aggressive selling. We can see on this bar here, we are oversold. Feels a bit climactic because, if we can compare this spread to the previous spread, look at the volume. So spread a little bit smaller, better close off the lows, an extra 30% volume, there's buying in here. And then we get the clustering of closes at the lows, volume dissipates. So something's occurring down here, Roman. Why is there a continuation? If you have a look at the analog, that's a breakdown bar here, here. Then we hold here, here, and then we get continuation, but here we're holding. Something's changing here, Roman. There's definitely buying coming into the market here, or a lack of selling, I should say. There's a lack of selling on these two bars, and then there's buying coming in on that bar, because that is bullish effort versus result, as we discussed. So this is what I'd be thinking right here, right now. Anything you would like to add here, Roman?
No, that was beautiful. I mean, what catches my eye obviously is this two, and then what happens afterward. I
Yes.
mean, it just like we're seeing diminished momentum to the downside on the volume surge. So that usually it tells us that there is a presence of the demand. Then I would start thinking, okay, so what does it mean? What does it mean? Because our global structure is all about distribution, and yet locally we are showing that demand is present and we are anticipating maybe some kind of rally. So what kind of rally? Counter to the trend
Yep.
rally.
Mm-hmm.
And with that, what kind of counter to the trend rally could we possibly have? Probably a combination of the stopping action plus automatic rally as the change of behavior. So therefore, we could even project the size a little bit, like take the largest attempt to rally. Here is one right here, and you could say, okay, well, at least that and slightly more. So that's measurement number one that we could do. Okay, then you start thinking, okay, where is this breakdown selling? It actually all about this bar right here. So
Yep.
I would say like this is the level that I would be thinking would be my target. So I'm
Yes, I
basically
agree.
thinking, yeah, this is my swing trade, which is the counter to the trend trade. Therefore, my size is going to be less. And I want to go in almost immediately. The only confirmation that I require because of these three closes here, the only confirmation that I require is overcoming the high of this last bar. That's it. If we do this, I don't want to buy it somewhere here or here. It's a little bit too late. See how on the counter trending trade, you want to be as close, to the bottom as possible. You could be buying it now because this is one of the lowest bars so far. I would be comfortable buying it here. So for instance, buy now as a probe, right? So
Mm-hmm.
maybe like one half of the probe and then one half on the breakout. And then I would put the limit sell. I would not be even thinking about like, oh, I want more. No, I want actually less, but I want precision of less target here. So just somewhere here in this area, in this cluster, this would be my target, really.
Okay.
And that's it. So if this is an automatic rally, I'm getting out completely, and then I'm waiting for some kind of retest, maybe some kind of trading range, and so on and so forth.
Well, nothing for me to add there, Roman, either.
All right, let's go to the solution then.
Well,
William, how does this unfold? How does this solution unfold? And how would you trade through that?
Well, exactly. So 2, wonderful, right? What do we see? That's our kind of our change of character bar. The best buying bar we've seen in this downtrend, breaks above these highs. Fantastic. We continue momentum, pushes up to 3. Then we have our change of behavior. So this is where it gets very interesting. As price reacts from 3, what 2 observations I'll be making. First of all, look at the volatility. Look at the contraction of the spreads coming down, Roman. Very minimal. Look at this selling compared to this buying on the way up. Again, very minimal, but also look at the volume. Where is the supply? Where is supply? This is what I'd be thinking. Like, we had selling on the way down, ends climactic. We get that change in behavior rally, then we have the retest, then we have the testing action here. There is just no selling present in this market. So you can buy A, you could buy this little local spring at B, or you could buy the demand coming in here at C, which we break this supply line. And then from here, it does go up to kind of this little ice area. We have a little supply zone. But do we need that zone, Roman? Look at A. Look at the volume coming in here and the close off. I mean, close off the highs. Look at the shortening of the thrust. What do we see emerge in this selling zone into this breakdown bar over here? We see selling. So you get in around here, this testing action, A, B, and C, and you cover over here. Now, that is about 45, 50 ticks. You know, it's $500 a contract. However, the whole point of this exercise, well, really for me, is it is a counter trend played, Roman, as you said, and there's no causality. So you want to reduce exposure, and you need to understand the trade's limitations. For example, when we're thinking of being aggressive over here and trading at the lows, and there was enough reason to be uber aggressive over here, but on this testing action where we see no supply, we know that the market is going to have a rally of sorts, especially with this price action over here, A, B, and C. But we're not holding on. My expectations are into this zone. I'm not expecting the market to break on through and have a change of behavior. You know, you have to go into that mindset knowing really you want to be looking for a short around here, around this area. That's what you want to be doing. But the fact of the premise is here, although we're down, we're in a distribution formation, and we can see that it's a little bit climactic. There's no supply in the market. There's nothing wrong with, if you imagine this, this is white space, isn't it, from this area here? There is enough wiggle room for that counter trend move, you know. But understand the trade limitations. There is no causality. You know, we're not buying and holding on, you know, with hope. You know, you understand what I'm trying to convey here, Roman? Yeah, good.
Yeah, okay, so let's go through the trade, you know, from my perspective as well. After 2, which was really good, so it pulls us in, right? So 1 open, 2nd open. Then this bar has somewhat relatively high volume signature, so it could get you out of the position, but that would be the incorrect decision. Why? Because what does it achieve at the end of the day, even though that selling is available there? Not a lot.
There is selling in there. There is presence of supply. However, the retracement is minimal into that bar.
Yeah,
That's the
1.5. So
Yeah,
you have to stay on this,
yeah, you have to.
on this bar, and still think about the higher targets, right? So we said our target was from here to like to here. See how it doesn't reach this, right? So what do we do? Well, first of all, this bar right here after 3 would be a little bit concerning because it covers the whole spread of bar number 3. And then this weaker rallies would push us out. At the minimum, we would just get out somewhere here, and this would be the trade. Like this is the worst trade out of this position, and then there could be a slightly better trade, something like this. Okay, so that's one trade. The second trade obviously comes after the no supply. William has explained this, so I'm not going to do a lot, but it's just all about this bar, the recovery after the commitment to the downside, and this bar right here, and the test that follows. So this 3 bars is your buy, and I totally agree with William. Where would we go now if we break this level and we break like that? Well, then again, into the breakdown bar itself. So therefore, a touch here would be the second trade. And then you could even create the trade to the downside, because now you're seeing the structure of this whole, trading range. And your expectation is that, yeah, there's going to be some kind of, attempt to retest this low or retest this low. Okay, and that would be the trade. Was it fun, guys? Was it fun to go through all of this? Because we are done at this point, 10:31. So in the next session, we have one more case study like this from the best of Wyckoff. So we're gonna do that. So keep this in mind.
We have a story of springs.
Yeah, a story of springs. Oh my gosh, that's gonna be, yeah. So for those of you who are new, again, go to the website, sign up for our sessions, Wyckoff tape reading sessions. And next week we're just gonna do the same thing. We're gonna go through the markets, then we're gonna do the case study, and looking forward for you guys to join us. William, what is the benefit? Like what is the one benefit that you would say like from these sessions that our students could extract?
I think the number one benefit that people are going to get from the tape reading lab is the perspective of 2 Wyckoffians, looking at the lens of the market through your eyes and my eyes, and they can extract value or cherry pick bits and bobs from both of us. But someone said here, is this what we do in all sessions? Well, we are going to do another study where we're going to campaign a stock and do some bar by bar analysis. Sometimes we share some trades. That's very enjoyable. Sometimes we have other exercises. So they are quite varied. There has been a lot of market updates of late, but we do have some fun and exciting studies that we're going to start pushing in the tape reading lab, Roman.
Yeah. All right, and with that, guys, thank you so much for being here, and we'll see you next week at 9 a.m. 9 a.m. Pacific on Wednesdays. All right, thank you, guys, and thank you, William.
Have a great trading week. I'll see you all next Wednesday.
Bye-bye.
Take care. Bye.